In 12 months, Micron Technology went from a $93 stock to $916 at today's close, an 885% total return in one calendar year. Today, we break down what happened, why, and whether the move can continue. This is research, not financial advice. Before the thesis, the math. Here is Micron's share price moving over the last 12 months, quarter by quarter. Pay attention to where the move accelerates. Those are the inflection points where the thesis was confirmed. For snapshots, one per quarter. Months 1 through 3. Micron starts at $93 in late May 2025. The 52-week low of $66 sits just a month behind. By August, the stock climbs 28% to $119. The base is forming. Most retail is not paying attention yet. This is institutional accumulation. Months 4 through 6. Hyperscaler capital spending commitments accelerate. Microsoft, Amazon, Google, Meta, and Oracle all guide higher on compute capex. By the end of November 2025, Micron has more than doubled, $236 per share, up 154%. The artificial intelligence memory narrative goes mainstream. Months 7 through 9. Micron prints FQ2 fiscal 2026 earnings on March 19th. The numbers are extraordinary. Revenue nearly triples year over year. Gross margin doubles. Earnings per share goes up roughly eightfold. By February month end, the stock is at $412, up 343%. Operating leverage in action. And the full 12 months, $751 at Friday's close. 706% total return in one calendar year. 52-week high sits just above at $819. Market cap, now $847 billion. The question every investor needs answered. What drove this, and can it continue? The answer starts with one fact about modern compute. Every artificial intelligence accelerator needs memory. Not regular memory, high-bandwidth memory, called HBM, stacked vertically beside the compute die. The world is structurally short of it. Demand exploding, supply constrained. That is the setup for a vertical move in a commodity business. Micron's HBM3E memory is shipping in volume to the largest artificial intelligence accelerator customers on the planet. Every training cluster, every inference server, every hyperscaler build-out pulls more of it. Customers have been begging for additional capacity. Micron has been allocating, not selling. Exactly the behavior you want as a shareholder. On May 12th, Micron started sampling a 256GB DDR5 server memory module, the largest standard module ever shipped, double the previous industry capacity. Hyperscalers were asking for this product to feed large language model inference workloads that need massive context windows. Pricing is premium and contract locked. On May 5th, Micron started shipping the 6600 ION data center solid-state drive, 245 terabytes in one single drive, the largest in the entire industry. A direct play on hyperscaler storage expansion as training datasets grow larger. Margins on these enterprise drives sit well above corporate average. On May 22nd, the catalyst that pushed Micron to its closing high. The company announced a major manufacturing expansion in Virginia. Domestic memory production is now an explicit national security priority. Micron becomes the only meaningful US-based volume memory producer. That announcement is part of why the stock now trades at $916. That covers the demand side. Now the financial reality that confirmed the thesis. Price action without earnings is speculation. Price action with earnings is a re-rating. Operating leverage is what makes a commodity memory company go parabolic. Here are the actual numbers from Micron's last 4 reported quarters. Start with revenue. 12 months ago, FQ2 fiscal 2025 revenue was $8.1 billion. The most recent quarter, FQ2 fiscal 2026, printed $23.9 billion. Nearly triple in one calendar year. That kind of trajectory supports a re-rating to a much higher market capitalization. Now, look at gross margin. 12 months ago, 37%. Already healthy for a memory company. Last quarter, 74%. Double in 12 months. That is the textbook definition of operating leverage in a commodity memory cycle. Every incremental revenue dollar at constrained supply pricing drops almost straight to the bottom line. And here's the punchline. Earnings per share. $1.41 12 months ago. $12.07 in the latest quarter. Roughly eightfold earnings expansion in 1 year. That is why forward price to earnings sits at just 7. Even with the stock at $916, analysts expect this strength to continue. Next earnings report lands on June 24th. Wall Street consensus is $19.15 per share, another sequential increase from the $12.07 we just saw. Consensus revenue, $33.6 billion. Micron has beaten consensus on all four most recent reports. The setup is for another beat. Now, the most important question. Where are we in the memory cycle? Memory is cyclical. Booms end. Busts end. The real question for any investor buying Micron at 916 is, how much runway is left before the inevitable mean reversion? On supply, the news is constructive. The three major memory makers, Micron, Samsung, and SK Hynix, have all maintained capacity discipline. No major DRAM wafer fab additions are scheduled to come online through calendar 2026. That keeps pricing firm and protects margins. On demand, every hyperscaler has guided capital spending higher into fiscal 2026. Microsoft, Amazon, Google, Meta, Oracle, all of them. CapEx dollars in the artificial intelligence build-out pull memory demand with them. As long as that CapEx curve climbs, memory pricing has support. Spot DRAM pricing remains firm. More importantly, contract pricing for HBM memory is locked through calendar 2026 for major hyperscaler customers. That gives Micron revenue visibility, a luxury this industry has rarely had. The current cycle has visible runway into next year. But every memory cycle has turned eventually. The last one peaked in 2022 and bottomed in 2023, with Micron posting a $5.8 billion annual loss. Peak to trough, the stock dropped over 50%. Position size and risk management matter. Do not size like cycles go up forever. Now to close. Bull case and bear case side by side. Then where Wall Street consensus sits. Research so you can form your own view, not financial advice. Memory is a high volatility cyclical name. Your risk tolerance is your decision. Bull case point 1. Micron's HBM3E volume share is climbing into a multi-year hyperscaler build-out cycle. As long as artificial intelligence compute CapEx stays elevated through 2027, memory demand stays elevated. Forward earnings visibility is the best this industry has ever had. Bull case point 2. Operating leverage is now proven, not theoretical. Revenue tripled, gross margin doubled, earnings went up 8-fold, all in 12 months. And the full year confirms it. FY 2025 revenue of $37.4 billion versus $25 billion the year before. Bear case point 1. Memory is cyclical. The current cycle is the strongest in 20 years. Mean reversion on margins, pricing, and volume is the single largest risk. If artificial intelligence CapEx disappoints in any quarter, multiple compression on a stock at 74% gross margin would be brutal. Bear case point 2. Samsung and SK Hynix are both aggressively expanding HBM capacity. If either competitor takes meaningful share, and Samsung in particular is investing heavily, Micron's pricing power and gross margin could compress materially in 2027. And here is where Wall Street consensus sits. 44 covering analysts. 9 strong buys, 30 buys, for holds, 1 sell. Mean 12-month price targets 613. High 1100. Low 249. The street is constructive. The spread shows how much disagreement there is on cycle longevity. That is the full Micron thesis. Not financial advice, research only. The numbers, catalysts, cycle context, bull case, bear case. You decide your position size and time horizon. Subscribe and turn on notifications for daily breakdowns. See you in the next video.